Let's get down to the New York Stock Exchange, check in with Jim Cramer. Hey, Jim, let's talk about what happened yesterday in the markets with technology shares under such pressure after you saw yields rise. You were looking at the NASDAQ. I think it closed below its 200-day moving average for the first time since April of 2020. How big of a technical issue is that? What do you see happening next?
Look, I think it's an opportunity. I think there's two NASDAQs. There's the one that's been created since 2018, and they're almost all awful. And then there's the ones that are standard and good, and I think that they're going to have great quarters. But they're not differentiating right now. I mean, I look at any company that came public since 2018. We almost want to sell all of them, particularly the ones that are pre-revenue, which is a hilarious term I haven't heard since 2000. But a lot of the companies that came down yesterday, Becky, were really, really good companies. And I think you have to start buying them. We talked about Airbnb last night. I mean, this is a very profitable company, and it shouldn't be bunched in with a lot of other clown companies. It's certainly the SPACs, which are hilarious.
What about companies like the semiconductors? I mean, Applied Materials was down by almost 9% yesterday. Semiconductors took it hard. Communications companies took it hard. A lot of these are real companies, too. But what do you think?
Right. Well, ASMLF reported last night, and ASML looked great. You know, look, if the Chinese were allowed to have any, we've been blocking the Chinese, they would be completely sold through. Someone said that they missed their numbers. I mean, how do you miss your number? You're like a sold-out company. So that is emblematic of what you're throwing away if you're throwing away Applied Materials. I think that Lam Research has far more business that it can handle. I mean, the issue is, if you're the Secretary of Commerce, is how do you get Lam Research to be able to work 25 hours a day? So these companies, suddenly there's no chip shortage. I mean, these are all made-up things. I mean, it's like the stories that I'm reading about how everybody's fighting over bankers, trying to get bankers. I mean, that's a completely untrue story. You know, if you're Goldman Sachs, you're turning down people who want to work there left and right. So there's a lot of untrue narratives that have been going on solely because of the tenure and the reason why we're just making them. Not me, I'm not making up stuff, but I did a lot of work on Goldman yesterday, and I used to help figure out compensation. Goldman's pretty much in charge of compensation. So the idea that they somehow are paying people more because they're making billions of dollars, I think that makes sense. Morgan Stanley with a great number. Bank of America is going to make $6 billion more if we raise rates 4 times. So you can't have it both ways. The bears are saying if they raise it 4 times, it's bad for Bank of America. But if they don't raise it, it's bad for Bank of America. Forget it. It's $6 billion because they're not going to pay you more in your checking account. So I kind of rebel against half the narratives I'm hearing, Becky. I don't rebel against the idea that the Russians are going to provoke Ukraine. But against the money that Bank of America made today, I mean, it's extraordinary. And look, I was listening to Mueller, Procter & Gamble. They did amazingly well. So we can sell all of these and come up with something which says, it's the 10-year. But, Becky, I mean, Mueller, they're doing so well. Why do I have to sweat the 10-year program?